Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. Happy Friday. Welcome to the once-a-week update from Street Views. We're going to be like Willy Wonka. We've got a lot to talk about and not a lot of time. So with that, looking at the S&P 500, let's pull this back a little bit. You know I love this trend line. I've had it up here the whole time, every time we talk about it. So you've got highs back from a little over a year ago, this downward trend line. S&P has hit its head on there every single time and failed to the downside. Most recently, just a few days ago, right? Tested it, boom, failed. What I will say is that the one encouraging thing is the broad S&P sector did not make a new low, right? It only dipped down pretty modestly before it tried again, as opposed to in the past, it's always made a new low before resuming any kind of uptrend again. So that maybe is a little bit encouraging. If you look elsewhere, as we've said, perhaps this year the best money will be made outside the United States. I still think that could be the case. Emerging markets, here's that chart, EEM. You've got a great break above the 200-day. Looks like it wants to consolidate a little bit. You got the 50-day, 20-day moving up through it as well. So that does look interesting. We're doing it a little bit different. We are playing small caps in China, ECNS, instead of the big guys. Big guys always get into trouble with the government, it seems like. We're going small caps. And we're also doing emerging markets ex-China, EMXC. We're doing that as well. And we're doing a fixed income play too. Let's go on to talk about energy. Schlumberger reported good numbers this morning. Stock looking up 1.5% after having a huge run. So the fact that thing even can gain from here tells you the kind of momentum going on in oil service. I do think oil service, OIH, is probably the best place to be right now, as opposed to E&P or the integrateds or what have you. Within that, especially interesting developments happening in the offshore drillers. So I don't know if you've noticed this, but you look at Transocean, you look at Diamond Offshore, you look at Ocean International, all these guys have had really near-term pretty good runs. So what's happening, let's take Transocean for a minute. Let's back this chart up, give you a longer-term view. These guys were, left for dead, almost bankrupt. You look at Diamond Offshore's chart. I mean, this looks like almost bankrupt right here, traded down below $1. So that seems to be they couldn't. There's the bond markets were closed for these guys. There's no way to get capital. That has changed. So recently, Transocean just did a big bond offering. They don't have any real debt maturities, I believe, until 25. So this chart, it's had a strong move. It wants to look. It's trading up again here this morning. I wouldn't be surprised to see this thing consolidate a little bit and make a run towards $7-8. I just think the thought is this is the incremental source of supply for what could very well be a tightening oil market going into the back half of 23. So offshore drillers, something interesting there. Take a look at just kind of a word of caution. The industrials had a really rough couple of days. Look at that. The XLI has just traded down sharply. Had a really huge move after the October lows into December, and it's pretty much gone sideways now. A decisive move lower. This is an area that I've been a little bit cautious about in terms of just the cyclicality. I think it's a little bit too early for broad exposure. I think some stuff can work, has worked. You look at like Caterpillar, the perception there is these guys are going to have plenty to do. Inflation Reduction Act, CHIPS Act, internationally, you've got this separate, deglobalization going on. So everybody's going to be trying to build their own supply chains, build their own plants. manufacturing facilities, hospitals in China, whatever. All that stuff takes machinery. That stuff also takes things like copper, which has had a great run. We own the COPX, the copper miners. This thing probably consolidates, probably continues to go higher. Low inventories, lack of real incremental supply in the near term for many new mining projects. So copper looks great, which is funny because it runs in the face of the cyclicality. You wouldn't think that it'd be doing that well now, but I think it has its own internal dynamics going on above and beyond the cyclicality of a recession. And what else? Oh, semis. Let's do that real quick. Semis have had a real good run. They're kind of getting into a little bit of trouble here. We'll see what happens. We are not that involved. We did take a little bit of Tokyo Electron. Reason being, there's two semiconductor companies that are going to be relatively exempt from not being able to do China, right? The CHIPS Act says that companies out of the US can't sell into China, what have you. Tokyo Electron, based in Japan, doesn't matter what the US says. ASM Lithography, based in the Netherlands, doesn't matter what the US says. So those two, I think, are interesting plays. Still could be early. This thing could come back in. So we're going to keep a close eye on that. And then Air Test, I don't know if you ever came along for this beauty. Great quarter again. This thing's just on fire. It's probably going to consolidate here. Forward earnings estimates looking like they're probably going to be at least $1. So if you think about this thing trading in the mid 20s, get this thing maybe around $26, like that'd be a good entry point. I see it trading north of 30 in the not too distant future. That is it. Have an awesome Friday. And take a look at our high conviction ideas list. That's brand new. That's for subscribers. And reach out and say hello. Have a good day.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy.